Let's welcome in Raamdeo Agrawal. He's chairman and co-founder at Motilal Oswal Financial Services, and he's joining us from the sidelines of the Motilal Oswal India Investor Conference. It's the 20th edition. Raamdeo, great to have you with us here. Appreciate your time. Thanks very much. Prashant this side. The mood is buoyant as it has been the last couple of years. A mini heart attack about 10 days back with global markets and huge amount of volatility. But that was just it. And the market has looked through that as well in some style, especially here in India. In the US, the S&P is just 2% away from its highs. Remarkable stabilization across markets. What are you most excited about, Raamdeo ji, at the conference? What theme, what would you like to hear over the next couple of days? What would you keen to it's not just what you are telling investors and they'd want to hear from you. What do you want to hear from the people who are gathered there for the conference?
Actually, this is a wonderful time, post-election and post-budget and all. This conference is coming up and we are seeing very wide participation from the corporate side as well as from the fund side. A lot of FIIs are coming in today, so I am looking forward to talking to them. So I have two objectives to figure out. One is sitting through the corporate meetings and try to figure out what's happening on the ground because the recovery post-COVID has not been across the board. I mean, there has been some patches where like consumer and all, FMCG and all have been very slow. So what's happening there? So we have Godrej Consumer coming up and Hero MotoCorp will start the session, one session immediately after. So there are a whole lot of corporates we have designed to get two things for the people who are attending the conference. One, to figure out what's happening on the ground across the sectors, where the bright spots and where are the challenges. Second, what's the behavior likely to be of the FIIs? I mean, FI is a big player in Indian context. Of course, because of retail participation, the importance of FIIs is kind of reduced, but still they are very large players, and their participation, particularly on the upside, buying side, can further fuel the markets, what we are seeing in last 2 years. So these two aspects are the key focus points for me.
Very interestingly spelled out, Mr. Agrawal out here. You speak about on the corporate side, how's demand, and on the investor side, how the FIIs are looking at the Indian market. You talk about bull markets climbing walls of worry. There are multiple mountains of worry that we've crossed over the last month and a half or so itself. But now the bull market itself has become a bit of a cause for worry, largely because of everyone talking about valuations and the kind of euphoria that we are seeing in a lot of the stocks. Is there any hint or tinge of risk among all the participants who are there around? Is there, any sort of worry that people are talking about?
So this early in the sense that we have just about, this is early morning, they are just coming in, pouring in. So through the day, as we interact with them, we'll get to see more probably one-on-one meetings in the evening. That will open up their concerns, their excitement about India. I mean, I think the only concern, even among the domestic investors and global investors, is the valuation. Global investors have a choice not to come or go to some other markets, buy stocks somewhere else, or not buy at all. Whereas domestic investors don't have any choice, but if at all they want to buy, they have to buy India. So, so that's a fundamental difference. And so we have to gauge the mood about the FIs. And what I had seen 2 months back, I was in US, and what I felt was they were waiting for the election event to get over, and then they will take a fresh look at India. So whether they are as positively inclined as the domestic investors, that we have to see, or will the valuation keep them away? So it's I think we can talk about it only after 2 days, not now.
Raamdeo, the one corporate conversation that I would really watch out for and would want to know what the outcome is from Hero MotoCorp. I think you have some members of the management who are joining in. And these are very, very interesting times for the two-wheeler segment, right? Because you have Bajaj turning on the competition by launching that CNG bike. You have Ola really turning on the competition by getting into motorcycles as well. And look at the Ola stock, Raamdeo. It's almost doubling since listing. So markets we know can swing to extremes, extreme fear and extreme greed. Where do you think we are on a business like Ola? And in general, what's your sense on two-wheelers? There's so much happening here.
So, as the bottom of the pyramid picks up, I mean, when the trickle down happens and bottom of the pyramid picks up, the demand for two-wheeler has to just explode, because the penetration still has a scope to move up. And for last 2-3 years, they were slow immediately after COVID. So, a lot of replacement demand is also likely to happen. So, my sense is that demand for two-wheelers is going to pick up, but that's whether it is happening in aggregate. I mean, yeah, the excitement of Ola for their market share, the excitement of new business model, those things are there. But actually what is happening on the ground, that will come to know when we meet Hero management and Ola management or whosoever are there from the industry. So I would think that the best is ahead for the industry. As we go forward, recovery will pick up. I think we've seen the first quarter result. First quarter result was fantastic for Hero, and I think they are going to get back their volume pickup because monsoon is very good. So the post-monsoon, I think when the crop time comes, my sense is demand will be quite buoyant.
Got that. Raamdeo, one of the other names, by the way, is Zomato at the conference?
I don't think so. I mean, they might be there as a company meeting, but they're not there on the CEO track.
I see. I mean, we're getting newer and newer ways of assessing demand, right? Weekend orders. I'm sure you would have seen. And the pace of ordering, it's something that you've been... I don't know if you have to do it now every weekend. On Monday, we have to see what the weekend was like we do for movies sometimes. But incredible run. I mean, and you've been bullish. You were early on. You've been bullish.
Yeah.
But at a fund level, you've also been booking profits there, Raamdeo ji, as far as Zomato is concerned. What's the thinking overall?
Yes.
And how much do you own? How much did you start with at the peak, and how much do you own now, as far as that position is concerned?
So that, I mean, at mutual fund level, those positions keep changing. But what you said is right. What kind of thing we accumulated at sub-100 level after the first correction, I think quite a bit of that we have sold at a mutual fund level. But exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus. I think even fund managers, they also get a little jittery when the stocks move like this, and they do like to book some profit so that next opportunities they can bet on. And also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant, in the sense that this is the largest internet business, and it is one of the largest opportunity one is tapping in quick commerce particularly. So I think the best is yet to come again in this particular segment.
You know, the wealth creation metric that you have, Mr. Agrawal, it's usually about the size of the opportunity, the improvement in margins, and the underlying valuation re-rating which may come about as well. For Zomato, we've seen a fair amount of that, but the size of the opportunity still remains. I wanted your thoughts in particular on Trent, because there is a CEO track out there. Trent continues to compound at upwards of 80% when it comes to earnings. Valuation re-rating has happened, I mean, over 130 times 1 year forward earnings. What more are the triggers for wealth creation out here? What is it that you would like to hear from the management of Trent at the CEO track?
So the valuation part, I mean, businesses are very exciting. What they're doing, what they're achieving, that is very exciting. But the valuation part, which is happening at 100, I mean, the pace at which, even if you look at the Ola listing at 76 and now 140, as I've heard about it, I think 140, 135, 140. So the kind of demand which is there in the system, and all the fund managers, they're sitting on cash. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices even in Trent has reached a level which is very difficult to understand but there is a momentum in the company's performance as well as in the price.